I need to tell people big piles of money how they should think about defensive ideas, because I think even if you think we're headed to highs, and I think that's the general sense that unless we get a really deteriorating consumer or a big backup in 10-year yields, we're probably going to just have flows to get us to highs. I think people are still worried about the fact that there was part of a tweet last week that said, hey, we could have caused some earnings and economic damage
from
with
one
the
hot
policies that are already in
investment
place.
to another. We're trying to time the perfect market entry. And while those things can work for a small percentage of people, here's something most people don't understand. The real money isn't doing everything manually anymore.
This doesn't mean you buy staples and pharma.
Let me tell you a quick story. So yesterday I was talking to one of my mentors, a billionaire trader. Know what he told me? 80% of Wall Street trading is now algorithmic. The big players, the real success stories, they're not sitting there analyzing charts all day. That's why I'm excited to tell you about Corvado, an AI trading software I've been testing. Now, I've seen a
tradingview.com.
We're back. We're still monitoring that event at the White House. President Trump, in fact, making some comments just a short time ago about his feud with Elon Musk. The president saying about Musk that Musk and Besant did have an argument, as was widely reported to this point, but that he didn't see a lot of physicality. There's been some question as to how much that argument between the two men had escalated. Also said, I'd imagine Elon Musk would want to talk to me. The president said he would not drop the Starlink service made by Elon Musk's SpaceX company, calling it a good service. So that story rolls on. We bring you the latest as that event at the White House on Invest America continues to go as well. Meantime, OpenAI hitting $10 billion in annual recurring revenue today. It's a milestone that Kate Rooney tells us more about now. Hi, Kate.
Hi, Scott. Yeah, so that $10 billion in annual recurring revenue, ARR, comes just 2.5 years since OpenAI's chatbot, ChatGPT, hit the market, and that is the key driver we're seeing behind it. The sales numbers include that ChatGPT consumer business, which now has 500 million weekly active users, and the API, plus the enterprise side. It does exclude Microsoft's licensing revenue and then some one-off deals like the one with SoftBank. A source separately telling me that last year's revenue was around $5.5 billion. So this year's numbers, if you look at it in terms of valuation, it's about 30 times revenue, which does underline the sky-high expectations from some of the investors out there. I think of SoftBank and Microsoft. Last private valuation was around $300 billion for OpenAI. I'm also told by a source that in the next 4 years, OpenAI does expect $125 billion in revenue and aims to be cash flow positive. But Scott, in the meantime, this company is not profitable. I've also heard from sources the company saw about $5 billion in losses last year. No comment from OpenAI on those numbers, Scott.
Okay. Kate, thanks. Kate Rooney, still ahead. Tesla's make-or-break robotaxi moment front and center for investors. We'll tell you what to watch for from that upcoming event. When closing bell comes back, a stock that got a couple of downgrades today, but it's up some 4.5%.
buzz.com.
Up next, Tesla getting a pair of downgrades today. We have the details and what's at stake for that stock. The Market Zone is next. We're now in the Closing Bell Market Zone. CNBC senior markets commentator Mike Santoli here to break down the crucial moments of the trading day. Plus, big moves today for the cruise lines so far this month. Contessa Brewer with that. And Deirdre Bosa on the downgrades to Tesla shares today. There were a couple, but Contessa, begin with you. Tell us about these cruise lines.
Okay, well, so first of all, you might be looking at the stocks today and go, it's kind of flattish. But let me give you the backstory here. You've got Royal Caribbean hitting a fresh all-time high this morning. Norwegian saw its 8th straight positive session for the first time in a year. Now, add Carnival and Viking into the mix, and they all have between 10 and 20% gains over the last month. And over the last 12 months, Royal Caribbean's up more than 75%. What's driving all this? Well, one, cruises are seen as high value, which is important when consumer discretionary budgets are under pressure. Two, private islands are a big draw. And these cruises are global. So, international travelers who don't want to come to the United States for vacation can still pick up a cruise in an overseas port. So that leads to bookings, even if it's not here, around the world, Scott.
All right. Contessa, thank you for that. Contessa Brewer. Deirdre Bosa on these two downgrades for Tesla today. Those shares were up quite nicely.
They are, despite those downgrades. Now, they come from Baird and Argus, both pointing
to the breakdown in Elon Musk's relationship with the president as a contributing factor. Argus writes, Musk is a lightning rod for criticism, which is operational and political at this point. Baird calls it, quote, key man risk. Now, both are also citing the fundamentals, shrinking margins. They're cautious on demand. Now, those downgrades, Scott, they come just ahead of Tesla's impending robotaxi rollout in Austin, Texas, raising the stakes for Musk to deliver not just in this first month, but he's been very ambitious with his view of how he thinks they can ramp up to.
All right. Dee, thanks. That's Deirdre Bosa for us. All right, Mike Santoli, about 2 minutes to go here. You're going to hear the animation, and you're going to see it in just a minute. You know, I think it's interesting. Apple shares have rallied off whatever lows they were on the day. You know, you have to believe that a lot of whatever disappointment was in this name is already in it. That nothing that happened today was going to cause a big move in that stock. But how are you thinking about things from here?
Yeah, not a big game changer either way. Obviously, the big retreat in Apple down to the $200 level, plus or minus, probably did kind of wring out a lot of the anticipation of what you might hear today. In general, I mean, I see a market that's content to sit here at a 3.5-month high, but with parts of the leadership looking a little fatigued. The mega caps gave you a lot on the way up, and now it's about rotation. The Momentum ETF is down 0.4% today. The small cap Russell 2000 is up 0.6. A lot of the aggressive stuff is still running. It's the CoreWeaves, it's the Circle IPO. Tesla shares went up $6 just on those comments from President Trump that you mentioned a little while ago, which was really not remarkable except for the absence of outright hostility. So you see that there's a little friskiness in this market as we wait to see what comes out of trade. We priced in some further progress on trade. There's no doubt about it. Bond yields are tame enough today, and we go in search of our next main catalyst here and see if more broadly fatigue sets in, or if we're close enough to those old highs within 2.5% or so on the S&P 500 that it's almost academic that we're at least going to, reach out and try to see if you can grab it and hold. I think that's something maybe over the coming weeks you would look for, not necessarily days, but you got to be open-minded given how strong this move has been over 2 months.
All right, Mike, good stuff. Thank you. That's Mike Santoli. We're going to go out green today. As you see, it's been a good fight throughout the day, too. But stocks are going to finish across the board green. In fact, the S&P 500 looks to get 6,000 yet again above that level as well. It does it for us. I'll send it into overtime. I'm John Ford.
That bell marks the end of regulation. CSW Industrials ringing the closing bell at the New York Stock Exchange. Bernstein Private Wealth Management and the Alliance Bernstein ETF team doing the honors at the NASDAQ. Here are your highlights for today. Stocks ending the day higher. The Dow began the day down nearly 200 points before recovering. A volatile session for Apple closing the day in the red as its Worldwide Developer Conference brought few surprises. We'll have more on that ahead. The semis moving higher today with ARM, Qorvo, and OnSemi leading the way. Bank of America lifting their price target on ARM and OnSemi. And meanwhile, AMD getting a price hike at Citigroup. Tesla in the spotlight for 2 downgrades. Baird and Argus both go to neutral. Despite that, though, the stock closing higher. Another green day for CoreWeave, turning shorts into basket cases, soaring nearly 15%. The stock's up 44% this month. And some names hitting all-time highs today. Darden, Johnson Controls, Jabil, Seagate, and IBM. That is the scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Fort. Morgan Brennan is off today. Shares of Robinhood down 5% after the S&P didn't add it to the index, but the stock has still doubled since the early April lows. Coming up later in the show, Robinhood CEO Vlad Tenev live from the White House after an event touting a federally funded savings account for children that's tucked into the House budget bill. Let's turn now to the markets. Russell 2000 has underperformed over the last 6 months, down 10% on tariff-driven uncertainty, but it's outperforming this month, up more than 4%. Our next guest says now it's time to buy small caps. He joins us with some under-the-radar names that should be on your list. Let's bring in Evercore ISI Senior Managing Director, Julian Emanuel. Julian, welcome. I mean, Russell 2000 is down 2% year-to-date. S&P's up 3.5%. Tariffs could be a bigger risk for smaller companies, so why buy them here?
So it is, John, really a case of so bad it's good. What we did is we looked back over 30 years of data, and when small cap stocks have underperformed in the first 5 months of the year to the degree that they've underperformed large caps, what you tend to get is a very vigorous bounce in June, and that happens to coincide with the annual Russell indices rebalance this year on June the 27th. So we think that there's lots of reasons, particularly given the fact that when you think about small cap stocks, they are price takers, not price makers, and all of the uncertainty around tariffs, which obviously there's a long way to go between here and deals getting inked, but there's an expectation that we are approaching a landing area. This is a positive in terms of expectations for small cap stocks.
If I'm investing at home, though, I'm wondering, does historical seasonality even matter in 2025 when you got these 90-day tariff windows? You got whatever effect there's been on pull forward on imports. You got the questions about the consumer's credit situation in the back half of the year. I mean, how does all of that change what normally happens in June and beyond?
Well, it certainly complicates what, if you look at this year, has been an extraordinarily complicated picture to begin with. But we would argue pretty vehemently that the lows that we saw in April were the end of the bear market, and clearly you've had a very strong rally since. But when you think about where we're going in terms of policy and in terms of the idea that a recession has largely been taken off the table, although we may get weaker payrolls data, which actually counterintuitively is better for small cap stocks because their labor input costs are higher than a larger cap stock. And then, of course, inflation data, which basically, argues for reasonably robust pricing power. All of that conspire to be tailwinds for small caps.
Some of the names you have here: Centrus Energy, Cohen and Steers, Rambus, Sprouts, TG Therapeutics. Any theme running through those?
Really, the only theme that we would cite is that basically when investors look at these companies, the pace of earnings revisions is high. So essentially, these companies are going to continue to sort of they are raising their own bar relative to their peers in terms of earnings trajectories. And frankly, in an environment of this kind of uncertainty, you want a company that's expected to raise its earnings, really quarter after quarter, and the positive trend of those expectations.
Is there a pivot moment coming later this year, either end of summer, early fall, where if things have not played out the way you expect in this thesis, it's time to revisit?
There certainly could be, and when you look at the broad market in general, particularly at the S&P 500, you're trading over 23 times our estimate for 2025. So there is an argument that if there's difficulty in getting policy over the line, that this bull market, which we would argue is the resumption of a structural AI-driven bull market that started in 2022, was interrupted by this couple of months of sell-off and has resumed. But you could argue that there is a likely pause in here while markets digest the potential for policy going forward prior to what we would expect would be new highs later this year or in 2026.
Okay, until then, you'll look for some buys. Julian Emanuel, thank you.
Thank you.
Now let's bring in senior markets commentator Mike Santoli, taking a look at what the recent leadership in cyclical stocks says about investors' economic sentiment. Mike?
Yeah, John, it has been revived, let's say, at least based on the market's message here. Cyclical stocks relative to defensives. It's one of those key relationships you want to keep an eye on. It has come way off the lows from early April. Now, it's definitely down from the late 2024. That fourth quarter rally really was all about people assuming we're going to have an economic acceleration. The old kind of Trump trade 2.0 got people in cyclicals. We're not up at that peak. So clearly we have to keep an eye on whether you can keep this strength up. I would also say the outright weakness in things like healthcare in the last few months probably is dragging on defensives and is flattering this relationship of cyclicals over defensives a little bit. But nonetheless, you'd say this is a somewhat reassuring message that investors are considering the economy to be resilient enough to own those cyclical stocks. Earnings are going in the right direction. Now, in the shorter term, economic surprises have started to soften up. This is obviously the Citi U.S. Economic Surprise Index, so it just shows our economic data points coming in better or worse than forecast. And you see it just rolled over below zero again. Not certainly to a desperate level. We've been worse recently, but it just shows you there's been some moderation in some of the macro indicators. A lot of that might be the ISMs, which kind of qualify as soft survey-based data. But you have to keep an eye on it because the acclamation on Friday was, hey, this is a good and reassuring jobs number. Maybe it wasn't quite as strong under the surface, and you've had some negative revisions. So I still think maybe the leash on the economy might be should be shorter than many investors are so far using right now.
Mike, how should investors analyze cyclicals differently in this 2025 environment, given these are, economically sensitive stocks and consumer discretionary is in there, as is energy, so it's some stuff that's really tariff sensitive and some stuff that's seen as being particularly less tariff sensitive.
Yes, some of it is. I would say within cyclicals, one of the things that jumps out is that industrial conglomerates, but that also includes defense companies, which aren't that cyclical, are actually working really well and doing more than their share to keep this elevated. Consumer discretionary on a kind of across the board basis actually is doing okay, but it's not keeping up with industrial. So there's below the surface, there is a little bit of concern. I think the one thing you can say that's redeeming about energy is that it's such a small part of the overall market right now that it's not going to make or break your portfolio. So even if you sort of are relying on it for cyclical attributes, it's not really going to hurt you that much.
Is there much out there about investors needing to revisit the baskets that they have stocks in? I imagine those baskets might not have things moving again in 2025 the way they do in a typical year, either together or apart.
Yeah, I mean, look, I think it always makes sense to scrutinize. It's kind of a know what you own type of a game here. And, you talk about consumer discretionary. Well, Tesla and Amazon whip that sector around so much that it almost doesn't make sense to look at it on a market cap weighted basis. And those aren't really particularly cyclical. They kind of operate on their own dynamics. So I don't know that it's a 2025 problem necessarily, because I do think a decelerating economy, which is what we had in the fourth and first quarter, has so far remained above stall speed. So that's why you can say that the cyclicals have behaved roughly as you might expect. Although the Fed being a wild card in here, a wait and see Fed is only something that investors can deal with if, in fact, the underlying economy, does not give way.
All right, Mike, thanks. See you again in just a little bit. Well, several potentially market-moving events taking place today. First, Apple's Worldwide Developer Conference kicking off. You can see the stock took a dip when the event started and stayed down. We will get an analyst take on what Apple announced and what it means for the stock. 5,000 miles from Cupertino, U.S. and Chinese officials meeting in London. Stocks have had a huge run from the April lows. Will these trade talks continue that trend or derail the rally? Well, look when Overtime's back in 2.
both will love.
Welcome back to Overtime. Shares of Warner Brothers Discovery falling 3% today as the company announces plans to split in two, a streaming and studios division, which will include HBO, Warner Brothers Studio, and DC, and a global networks division, which will include CNN, TNT Sports, and Discovery, among other pieces. Well, officials from the U.S. and China meeting for trade talks in London today, aiming to cement maybe a bit of a truce. U.S. negotiators included Treasury's Scott Bessent, Commerce's Howard Lutnick, and U.S. Trade Representative Jameson Greer. National Economic Council Director Kevin Hassett telling CNBC that he expected today to be a, quote, short meeting with a big, strong handshake, unquote. Joining me now is a former U.S. Trade Representative, Ambassador Michael Froman, currently President of the Council on Foreign Relations. Michael, good to see you. So it looks like the areas that might see the first wiggles are the rare earths on China's side and the chips on the U.S. side, but those are areas of recent escalation. So will that really get us progress?
Well, the fact that they are talking and continuing to talk tomorrow is positive. And to the degree that they reach any agreement that de-escalates the tension between the two, I think that is positive. Particularly, China has discovered that it has leverage over the United States by using the rare earths and other critical minerals that it controls to turn on and off the spigot. And the U.S. has responded to that. And the question will be whether the U.S., which put on additional export controls in the name of national security. We said we needed them in order to preserve our national security, whether we're willing to trade that off against other interests like access to critical minerals that feed into a number of other products, clean energy products and the like, so batteries, et cetera. So it's good that they're talking. It's still unclear what's going to come out of the talks and whether we're right back to where we were perhaps 2 weeks ago or whether this also sets us on a path towards some broader agreement down the road.
Well, how much economic hardship do you think China is willing to take on right now, given that their economy has not been in the best position over the past several quarters?
Well, they have seen their exports to the United States fall precipitously, something like 30 or 35%. So it is a significant hit to their economy. But my sense is that they've got other options available to them. They're trying to dump their products on other markets. They're developing other economic and trade relationships and other partnerships and trade agreements and the like. Of course, they would like to see this de-escalated, but they want to make sure that they can maintain what they view as their economic strategy toward trying to achieve significance and dominance in a number of key sectors.
There was some talk that with the court challenges to the Trump administration's tariff approach, other countries might take more of a wait-and-see attitude towards striking deals. How pivotal will progress or not between the U.S. and China here be to the speed of those other deals getting done, you think?
I think it depends on the nature of the deal. The Trump administration did sign a deal with the UK, and others looked very hard at that deal. I think in terms of the courts, John, yes, this particular authority that the president used has been challenged, and the challenge may be upheld or may be overruled by an appellate court. But the president has a lot of other authorities. They take a little bit more time, more process, but he has certainly signaled that he is going to raise tariffs and use tariffs as a key tool. I think other countries would do well to take that seriously and not to try and second guess the process and sit down and try and negotiate.
Who do you think, what country out there is feeling like they've got the most running room now, perhaps better positioned with the pressure that's happening that the Trump administration is putting on China, the EU perhaps?
Yeah, I think the EU, which has been reluctant to sit down or hopeful that the administration would agree to eliminate all tariffs on a reciprocal basis, which was never in the cards. I think they probably feel like they've got to assess where they are vis-a-vis China, vis-a-vis the UK, vis-a-vis the president's challenge on authorities in the courts. But ultimately, they'll have to sit down and negotiate a deal with the U.S.
All right. Ambassador Froman, thanks for joining me here on Overtime. Up next, sticking with China, EV prices there coming way down. Why are those companies cutting prices, and could it lead to a bigger problem? What could it mean for Tesla? Plus, President Trump wants to give every new baby $1,000 to invest. Robinhood's CEO Vlad Tenev is at the White House for that conversation. He's going to join us ahead. And Health and Human Services Secretary Robert F. Kennedy Jr. saying he will remove all 17 members of the Advisory Committee for Immunization Practices, saying the step was taken so the Trump administration could appoint new members. Vaccine-related stocks are falling after hours. We'll be right back. Welcome back to Overtime. Shares of Tesla have lost nearly a quarter of their value this year. Some of that's the fallout from Elon Musk's political activities, but there's also a less talked about reason. That's a sales decline in China. May was the 8th straight month its China-made vehicle sales fell. Now, this comes as rivals there, including BYD, have been cutting prices, leading to what some fear will be a price war that hurts everybody. Eunice Yoon is looking at what that means in this week's China Lens.
Fears are growing in China that its EV industry is in a race to the bottom.
Outside of China, this country is often accused by its trading partners of flooding markets with cheap Chinese EVs. These days, similar accusations are flying within China about China, raising concerns about financial stress in the industry.
The company drawing the most fire is China's market leader, BYD.
BYD slashes prices by as much as 34%. This mini hatchback, the Seagull, now costs only $7,700.
The intense price war has sparked high-profile auto executives to sound the alarm, with the head of Great Wall Motor calling the industry unhealthy. In a local media interview in late May, Chairman Wei Jianjun drew parallels to China's moribund property sector and its now defunct poster child, developer Evergrande. An Evergrande-like crisis already exists in the automotive industry, he says. It just hasn't erupted yet.
Great Wall's dealerships are feeling the pricing pressure too. This dealership is offering up to 20% off on some of its new energy vehicles.
A government-backed industry group has since called on companies not to dump vehicles below cost and took a shot at BYD for creating a price war panic. BYD has dismissed Wei's comment as alarmist and says it believes in fair competition. Even so, sellers at this used car market see another sign of strain.
The authorities are looking into a phenomenon known as zero-mileage used cars. This is when cars are registered and plated and then marked as sold, but they haven't ever been driven.
Sellers told us the tactic is meant to help car companies and dealers inflate sales volumes. Used car salesman Ma Hui is worried where all the competition leads. All of us were losing money last year, he says. There are too many companies making too many new energy cars.
And today, the official Communist Party paper, The People's Daily, called for an end to the bruising price war, saying that it leads to nowhere. John?
Eunice, this is fascinating to me. 25 years ago, we had a PC price war in the U.S., but PCs are a lot cheaper than cars. There must be some perverse economic incentives happening over there for this to happen. Is it the push to keep workers employed? Is it some kind of local incentive, too much capital? What?
Both of those things. The incentives are from I think outside of the country. A lot of people would say the incentives are distorted because a lot of these car makers are backed by local governments. And so these local governments provide financial support. They see these car makers as a point of local pride. They employ people. So because of that, rather than allow some of these car makers to go under, they allow those car makers to turn to the global markets. And so that's one of the reasons why you see a lot of the criticism that the Chinese car makers are overproducing and pushing a lot of their product out internationally. In addition to that, when you're talking about incentives, BYD is following a pattern that we see quite often here, where for the Chinese business model, whereas BYD will slash prices, or these Chinese companies will slash prices to gain market share, because unlike in the United States, they don't have the angry shareholders. They don't have to worry about what the market says. And so at the end of the day, they're able to not think about profits as much as other companies would outside of the country.
All right. Over there, like over here, eventually somebody's got to pay the piper, though. Fascinating once again. Eunice Yoon, thank you. Let's get a news update now with Bertha Coombs. Bertha.
John, California Governor Gavin Newsom has sued the Trump administration today over deploying the National Guard in Los Angeles in response to widespread protests over federal immigration raids. The move comes as the president suggested Newsom should be arrested for obstruction. Newsom said Trump's remarks were a, quote, unmistakable step forward toward authoritarianism. A dire warning for the head of NATO today, as the organization urges its European allies to make a, quote, quantum leap in military spending to deter Russia. NATO's Secretary General Mark Rutte today called for a 400% increase in Europe's air and missile defense budget, saying unless spending is increased, quote, you better learn to speak Russian. And author Frederick Forsyth has died. The novelist responsible for such hits as spy thriller The Day of the Jackal, The Odessa File, and The Dogs of War sold more than 75 million copies worldwide. Forsyth was a former journalist who worked for England's MI6 spy service during the Cold War. According to his literary rep, he died at his home in England after a short illness. He was 86 years old. John?
Bertha, thank you. Well, Apple shares falling again today. It's the second worst stock in the Mag 7 this year. Can anything Tim Cook and friends unveiled at WWDC reverse this stock's downtrend? Meanwhile, its rival Microsoft soaring to an all-time high today. That stock is up 8 sessions in a row, and the chart hitting a bullish golden cross pattern. 50-day moving average crossing the 200-day. We'll be right back.
finding insurance.
Welcome back to Overtime. We've got a news alert on the debt ceiling out of Washington. Emily Wilkins has a story. Emily?
Hey, John. Well, we have now an updated projection of when the U.S. is going to hit the debt ceiling and no longer be able to get all of its obligations paid on time. The Congressional Budget Office now estimating that that date will come sometime between mid-August and the end of September. Now, this gives lawmakers a little more breathing room to pass Trump's mega bill. Remember, that includes an increase to the debt ceiling. Of course, we'll have to wait for the final bill to see exactly how much, but it gives them just a little more wiggle room as they work through some of the nuances in the tax pieces, and certainly there is plenty for the Senate to work through and the House to work through in the upcoming weeks.
Yeah,
John?
a lot of wiggling, so they need the room. Emily, thank you. Well, Apple is lower after the company's 2025 Worldwide Developer Conference keynote. There, execs unveiled the first major operating system redesign since 2013, calling the new look liquid glass. The stock has been hit hard this year, underperforming peers like Meta, Microsoft, and NVIDIA. So let's bring in Maxim Group Managing Director Tom Forte and our own Steve Kovac, who's there on site in Cupertino. Tom, very often there's kind of a collective yawn after these developer conferences. We saw it out of Google I/O. The stock went down, Alphabet did, but then popped later. There were some surprises in here, not a lot, but is it enough to keep the iOS and overall Apple ecosystems going, to keep developers engaged, do you think?
So I appreciate your collective yawn comment. I was thinking that it's not often that I exit a developer conference most excited about seeing a movie. In this case, Formula One looks amazing. I do think the liquid glass design is beautiful, but that's what we expect from Apple. What really disappoints me was that there was little new information on the much needed upgrade to Siri from artificial intelligence. They basically suggested we stay tuned till later this year. So I like your collective yawn comment. Formula One looks amazing. And I would say the liquid glass design is beautiful.
Steve, as you predicted last week on Overtime, it seemed like Apple was pretending that last year didn't happen. Siri barely came up, right?
Barely at all. And to Tom's point, they did mention, Craig Federighi, the software boss, did mention that they need more time to work on Siri. And then, yeah, silence. No more Siri after that. There were some Apple Intelligence stuff that was announced, some new features. There's some new additions to visual intelligence, which, by the way, uses some of OpenAI's technology. There's that live translation thing, nothing we haven't seen before from Google or Meta and so many other companies. But yeah, if you were coming into this event, John, hoping for some blockbuster AI announcement like we got last year, you did not get that. This is now, we're at this point where we look forward to the fall event for the next catalyst, which would be the new iPhones, and if there's anything they can do there to move the needle. But right now, I will just say, just looking around here at Apple Park in Cupertino, we had people on the inside with all the developers. Just the reception overall was quite muted, and that's because the bar was pretty low going into today. And after failing to deliver on that AI update to Siri, John, they had to make sure everything they said today would actually ship. And so it feels like they'll do that, just a little bit underwhelming, perhaps.
Tom, where, if anywhere, do you see Apple exposed right now competitively? And I mean that to say it's different if there's a competitor out there who could steal share from Apple in crucial markets, maybe in China. They've got AI features that Apple doesn't have, and those have proven to be popular. But if it's just a situation where there are a bunch of people out there experimenting and Apple's experiments aren't out yet, nobody's gaining significant traction, I'm not sure if there's real investor damage. What do you think?
Well, I think there's investor damage to the extent that you've seen sustained weakness in China on heightened, competitive pressure in China. So if you looked at the March quarter, they had low single-digit declines in revenue, which was improvement from the double-digit declines in the December quarter. But not having, lived up to the Apple Intelligence hype from last year, I think is a challenge. That all said, favorable results in London in the trade talks between the U.S. government and the Chinese government could be a massive catalyst for the stock, independent of the developer conference.
Steve, is there something that came out of I/O that could threaten Apple in the fall?
I don't know about threaten, but I will notice when we're talking about competition, John, first of all, let's stick with Google for a second. Last year at this event, Apple executives said they were planning to incorporate Google's Gemini into their Apple Intelligence product, sort of like they already did with OpenAI. That did not happen, even though Google did unveil that new AI version of search that would play along. There's a lot of talk about perplexity going on into here. And I also note on the AI competitive front, the reason we're talking about AI, the reason we're talking about Apple's take on artificial intelligence is because of OpenAI. And it's not a coincidence, John, that in the very beginning of this event today, shortly after 1 p.m. Eastern, OpenAI came out with a very curiously timed announcement that said they had that $10 billion annual revenue run rate. So they're showing, hey, we're making some generating meaningful sales here in AI. Meanwhile, Apple's going to show you next to nothing. I think that was obviously Apple makes a lot more money than OpenAI, but I think that was significant, little poke in the eye at the folks here at Cupertino.
Yeah, a little bit, but OpenAI is losing a lot of money. We'll see. Steve, Tom.
It's losing a ton of money.
Yeah, thank you. Well, Robinhood CEO Vlad Tenev just left an Invest America roundtable with President Trump at the White House. He's going to join us next in a First on CNBC interview about a new plan to invest billions in savings accounts for newborn Americans. It's part of that House bill. We're going to get to the stock's massive move as well. It's up 92% this year when Overtime returns.